In January 2021, the price of GameStop, a video game retailer with stores around the world, began to increase dramatically, surprising nearly everyone. This unprecedented turn of events took the internet by storm, as it turned out to be the result of an epic battle between a community of meme-loving traders on Reddit and several hedge funds who thought they were smarter than the average bear. But for now, it looks like the memers are winning and are making some impressive gains through the powers of memes and stonks. For years, WallStreetBets has been a vibrant community on Reddit for trading enthusiasts, complete with their own memes, influencers, and enemies. Users frequently turn stocks into the subject of memes, and often hype them up in hopes of big gains. In the past, the WallStreetBets community has made darlings of companies like the chip maker AMD, the mattress company Purple, and the automotive company Tesla, whose CEO Elon Musk is revered like a king. And they've certainly had their ups and downs. While some have made millions, others have had their trading accounts cleaned out. But all of these previous exploits pale in comparison to the WallStreetBets magnum opus, the January 2021 GameStop short squeeze. It all started back in 2019 when WallStreetBets set their sight on investor Michael Burry. Many may recognize from the film The Big Short, who bought a whopping 3% of GameStop. Around that time, Redditor Deep Fucking Value, a famous user on the subreddit, started banking on the success of GameStop as well. But things didn't really start to heat up until October 8th, 2020, when the price of GameStop rose sharply from $9.36 to $13.49, piquing the interest of users on the WallStreetBets subreddit, which led the community to begin putting together a plan. WallStreetBets' plan was to ride the wave of a market event called a short squeeze. The hedge funds Melvin Capital and Citron Research, who WallStreetBets see as sworn enemies, considered GameStop's video game stores a business that wouldn't survive long in our digital age, expecting it to go under in a few years. To short the company, investors borrowed and sold GameStop shares that they did not own, expecting the price to continue decreasing so they could later return the shares for a much lower price. In fact, they shorted more shares of GameStop than were actually in existence, nearly 140% of the company. And should the price of the company rise sharply, they would find themselves in big trouble. Some 3 months of shitposting later, WallStreetBets was waiting on some big event to help trigger the growth. And on January 11th, it happened. Ryan Cohen, the co-founder of the successful online pet retailer Chewy, joined GameStop's board of directors after having purchased a 13% stake in the company. From there on, the events unfolded at lightning speed. On January 13th, the price of the stock rose to $31.40, and then to nearly $40 the next day, while users on WallStreetBets pumped and hyped the stock with exuberance. But they were not going to stop there. While the price stood in place until January 21st, the short seller Andrew Left of Citron Research speculated that the price of the company would fall rapidly, which seemed to reinvigorate the WallStreetBets community to buy the GameStop stock. It soon became clear that the surge had only begun. On January 22nd, it hit $76. On January 25th, it hit $158. The next day, Elon Musk tweeted, "Gamestonk," sending the price soaring up to $243. Meanwhile, memes about the events had taken over the entire internet, and the WallStreetBets Discord had become a place of absolute chaos and mayhem. In response, Michael Burry tweeted out his denouncement of what had occurred, calling it unnatural, insane, and dangerous. Meanwhile, Redditor Deep Fucking Value posted screenshots of his wild gains, having turned a low six-figure investment into over $22 million by January 27th. And thousands on the subreddit urged each other to fearlessly hold a stock, or as they say in WallStreetBets, diamond hands. On both mainstream media and social media, short squeeze was the word of the day, and WallStreetBets was the place to be. The subreddit saw enormous growth, reaching over 3.5 million subscribers on January 27th and 5 million on January 28th. The GameStop extravaganza was followed by WallStreetBets jumping on other potential short squeeze targets, including the movie theater company AMC and the software company BlackBerry. But on January 28th, after GameStop hit over 500 during the pre-market trading session, things escalated. Robinhood, One of the most popular applications used by WallStreetBets traders restricted trading of GameStop and other stocks that WallStreetBets was memeing to the moon, allowing its users only to sell but not buy these shares. The move, which was also copied by several other trading platforms like Interactive Brokers and E-Trade, caused an outrage on both WallStreetBets and Twitter. Everyone from AOC to XQC piled on Robinhood with angry tweets. Posts accusing Robinhood of market manipulation and betraying the ideals of its very namesake flooded Reddit and Twitter, gaining likes and upvotes by tens of thousands. Lawsuits were being threatened, and rumors of coercion were thrown around, with people accusing Robinhood of lying in bed with large funds. Behind all the memes, hype, and wild bets, the WallStreetBets GameStop saga boils down to a David and Goliath story, pitting a community of meming investors trying to make a buck against big financial institutions moving billions of dollars on the market. And this sense of camaraderie and the collective belief that large hedge funds can lose to the underdog is what made this event a milestone in both financial and meme history. But what happens next? Will the price rise even higher? Not even the prophets at WallStreetBets know for sure. But whatever happens, we'll still have the memes to remember this historic moment by. And thank you for tuning in to another edition of Know Your Meme 101. For more information on all things related to memes and internet culture, visit knowyourmeme.com.